Tired of dropping your phone or struggling to prop it up? Meet the PopSockets phone grip with expanding kickstand in black, your new must-have accessory. Don't miss out. Grab yours today. Click the link in the video description to shop now on Amazon.
Welcome to the Google Trends Hub. I'm your host today. Alphabet, the parent company of Google, is making a big move back into the corporate bond market. According to recent reports, Alphabet plans to offer $4 billion of U.S. high-grade corporate bonds on April 28th, which would mark their first such sale since 2020. That's right, folks. It's been over 3 years since Alphabet last ventured into the bond market, and now they're looking to make a comeback with some serious firepower. The Silicon Valley-based tech giant is planning to sell debt in as many as 4 parts, with the longest dated debt instrument being a 40-year bond that yields between 1 percentage point and 1.05 percentage point more than U.S. Treasuries issued by the federal government. Now, Alphabet isn't the only corporation looking to tap into this market. Procter & Gamble and U.S. homebuilder D.R. Horton are also planning to sell high-grade U.S. corporate bonds in the coming weeks. In fact, dealers are expecting around $35 billion of new bond sales in the U.S. over the next week alone. The move comes at a time when global market volatility has surged, making it challenging for companies to navigate the bond market. But Alphabet is taking a different approach by lining up its first ever euro-denominated debt offering and targeting as many as 5 European bonds with maturities as far out as 29 years. This is actually quite interesting, folks, because it shows that Alphabet is looking to expand its reach into new markets and tap into the growing demand for long-term debt. And if you're wondering how this might impact Google's stock price, well, let's take a look at some analyst ratings. According to Wall Street analysts, Alphabet has a consensus moderate buy rating among 39 firms, with around 29 of them recommending a buy and just 10 holding onto their neutral stance. The average GOOGL price target is $198.59, which implies an upside of 23.87% from current levels. So, what does this mean for Alphabet stock? Well, it looks like investors are cautiously optimistic about the company's prospects, despite the recent decline in its share price. And if you're wondering why that might be, well, it's probably because Alphabet is still one of the most innovative and profitable companies out there. That's all for today, folks. I'm your host, and we'll be back with more news from the world of tech and finance on our next episode. Don't forget to subscribe to the Google Trends Hub channel for more in-depth analysis and insights on the latest trends and developments in the tech industry.